Alright guys, I'm going to begin right now. Welcome everyone to the FXTG education webinar. Welcome to the world of Forex with myself, Roczniak. General advice disclaimer. This presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules, the application of those rules to the strategy or strategies you are trading, the products and the full extent of your exposure to risk or financial loss. If you are in any doubt, you should seek professional advice. Now, number I. The advice contained on our site has been prepared without taking account of the objectives and the financial situations or needs of any particular client. And two, because of that, the client should, before acting on the advice, consider the appropriateness of the advice, having regard to the client objectives, financial situation, and needs. And three, you should know that FXTG clients are required to read all product disclosure statements. There's 3 in total. Now, welcome and well listen to me. I'm a highly regarded Forex trader, trading coach, Forex fund manager, and I'm residing in Australia. I have over 15 years of experience in trading the financial markets, Forex, CFDs, stocks, binary options, and I also did some options trading as well. My hands-on experience helped me to utilize simple and effective strategies to make money for my clients and investors. And last, my passion for trading in the markets has become my career, and I can also help you become a successful Forex trader. This is lesson 5. Just so you guys know, all the lessons that we do, we actually upload them to our YouTube channel. You can search us FXTG Australia, and you'll find all the webinars uploaded there, so you can view them anytime you like. Now, lesson 5, how to trade using the RSI Indicator by Roczniak, myself. What is the RSI Indicator? RSI is also known as Relative Strength Index. Its function is to measure momentum based on changes in the price to ascertain strength and weaknesses in currency and oversold and overbought conditions. The RSI indicator is displayed as a wavy or squiggly line with a scale of 0 to 100. The RSI also uses 2 horizontal scale lines to show overbought and oversold conditions. Those lines usually set at 70 and 30. Some people use 20 and 80, but as a default, most of the time it's 70 and 30. Most traders consider currency to be overbought when the price reaches 70 and oversold when it reaches 30. When the RSI is above the 50% mark, it indicates firm market. Sorry? And when it's below 50% mark, it indicates a weak market. The RSI, as with many other overbought and oversold indicators, works best in a non-trending market, as basically it's very hard to find the tops and bottoms, and I'll show you examples a little bit later on. Now, the RSI has a tendency to issue false overbought signals in bull market and false oversold signals in the bear market. Therefore, it should not be used as a standalone indicator. The RSI can effectively be used to identify the tops in a bear market and bottoms in a bull market. In other words, of a beginning and ending of a trend. The greater the number of days or bars, as you might want to call them, the RSI spends in the overbought or oversold region, the greater the chance of and the magnitude of the subsequent move in the market. In other words, the longer it stays at the bottom, it's most likely to go up the top, and vice versa from the top to the bottom. Guys, I'm going to have to mute the call. When you sell when the RSI crosses downward the 70 scale line, and you buy when the RSI crosses upward the 30 scale line. There are some traders that use a third scale line, which is set on 50. Basically, you buy when the RSI rises above the 50, and you sell when the RSI drops below 50. That's after it having obviously been on the top and on the bottom. Now, I'm going to switch over to the charts so I can actually show you some examples, and also if you got any question, you can either tell me with your mics, or if you can type it in. So let me flip over to the MetaTrader right now, and I'm going to unmute you, everybody, right now. Okay, guys, I'll open up a new window. Okay, I'll set a chart. Get rid of the grid. Get rid of the ask line. I like to see a clean chart. I'll make that bigger so it's a little bit easier to see. With a nice rush down in the euro. I hope some of you guys taken trades on that. Now, for starters, just so you guys know, you can find the RSI indicator in your MetaTrader under the indicators, which is right here, and you just drag it across, holding on to the left mouse, and you let go. You select the value, which is the period. You can also change the colors. So let's just say if you wanted to make the indicator red for that matter, you can change that. You can also change the width. This is standard. It will be just a very fine line. You can actually make it a lot wider if you choose to. And your levels, as I said before previously, the default levels are 30 and 70. And if you like to add the 50 line, just basically press add. You type in 50, and then you press OK. And OK, and there's the RSI indicator, as you can see here, a bit of a squiggly or wiggly line, or whatever you want to call it. Now, has anyone got any questions so far? Guys?
No, I'm good. I'm happy listening.
Everyone's listening? Okay. Like I told you guys in the slides, the more you see, the longer, as I should say, the longer you see the RSI indicator, let's say below the 30 line, which is the line here, staying in that vicinity, the bigger of a chance of a move, of a change of direction in trend. Which I'm doing this all live, so I've got nothing prepared here, so there's nothing that's just specific just to show you things. So we're doing everything live in here, so nothing's hidden, everything will be shown the way it actually is. Now, looking at this period here, there's not much showing of something being too much. So let's have a look back, where there was a period of time where the indicator actually did sit. Maybe I change the time frame.
I do have one question. What qualifiers can we use to confirm if the market is trending or not? Especially if we're using it in different time frames. You know, there might be no trend at all. And I've read that 85% of the time or 80% of the time the market is just trending horizontally. It's not actually moving up or down. But if you're in a different time frame, if you're looking in a 15-minute or a 30-minute time frame, sometimes it can look like there is a definite trend. But then if you switch over to a daily time frame, maybe it's not there. Is there any other way that we can qualify whether the market is trending or not, and that way we'll know how reliable the RSI is? We'll have an indication of how reliable the RSI is. You know what I mean?
I get you 100% actually. Now, if you were to, let's just say, look at a daily chart for that matter, for you want to check further whether there's a trend. And let me find something that was sort of more flattish than trending. It was a really good opportunities here. Basically, how you can see it, if you can, let's just say, all right, I've got one here. I've got, where was it? It was just somewhere here. I've seen it. Okay. If you were looking at this, this is sort of like not really much of a trend during the day. But what you can do, you go onto a higher time frame. Let's just say like here, I'm looking for a daily, and you can use the horizontal line to define, let's just say, your top, and then define your bottom of the or let's just have a specific day. Let's just say the top was here. We only got a beginning of a day. And then the bottom of the day, let's just say we only had the three candles here. Then you can basically see by flipping over to a smaller chart. Where did we go? I just lost this. 1 second. Let me go back. We done it on the.
We set it on the daily.
So that's why it goes back so far. Okay, from the 3rd to the 15th. So if I was going back to it an hour, make this smaller, so we can actually maybe capture the whole thing. 3rd to 15th of November. So that would have been in the channels. Basically what you can do is look at the channeling and see for the rebounds to see as the price travels from one extreme to the other. So you know, let's just say it's going one way and it rebounds and it starts reversing back. You can then say, okay, the market is falling, therefore you take that trend going down. But look, the best way I would say for you to do, I mean, this is sort of probably a little bit way too confusing, because you might look at this as channeling, other people might look at this as a trending up, trending down, trending up, trending down, as you move down to a smaller time frame, and so forth. So you always come trying to capture this, I suppose, channel, whether for other people looking at a daily, yes, it is a channel, but also is a downtrend. So what I would actually want to do first is to find whether there is a trend or there is no trend. So looking, let's just say, on an example of this Euro USD, looking at a daily, the first thing I do, I find the recent top, which is right here, and obviously the recent bottom. And
we're looking at a period that's from,
and I would draw
about April or May.
A trend line, okay?
Yep.
So this will show me a trend line on a daily. So I know here that definitely daily is trending downwards. I can make this a little bit more aggressive by drawing another trend line from the first point of touching to the next point, which is right here. So this double confirms me that obviously on a daily chart, the trend is definitely down. So I wouldn't be buying anything. Now, obviously, not many people trade the daily chart, so I'll usually move down to about an hourly chart. If I just squash this down, you can see the aggressive line right here. And I can also see that the market's turning. Therefore, again, I can look and draw another trend line on an hourly, and that's further telling me that the market is trending down. So now, let's just say if I trade, like I usually do trade, is the 15-minute chart. What's it showing me? The market is still down. Therefore, I would never take a trade unless it's closed above this line, and that's to be aggressive. And I would only enter into any trades going in the uptrend position until they actually cross this line here. That's when you know the trend actually has turned and most likely will continue up. So now I had a confirmation daily is down. I know that 1 hour chart is down. If I'm looking at a 15 minutes, it's down. Therefore, I will never take a trade up. Even though that this might retrace from this level to here, but I wouldn't take it. I would wait for the opportunity of the market to move down, go back up to the top, hit the line, do one reversal, and then I will drive the trade down. In other words, I only trade in the direction of trend being at least 2 time frames higher. So in here, the euro has been, like let's just say, there you go, it's going here sideways and it's going up. I wouldn't have taken this trade to go up because I know that the market on the 1 hour and a daily is down. Therefore, it would be way too risky for me to try to take some pips out of this market for that little move. I would rather wait for it like it happened here where it touched the line, and I would have just stayed in this trend, taking the trade all the way down. Now, you said about looking at whether the RSI is right. Okay, looking at 15 minutes, you know it has been in overbought position. You know that the market is trending down. Therefore, it's pretty safe to say that this peak here, it will be returning down, and you can trade it. You can get off at 50, or you can wait for it to hit the 30 level, and then you just out of the trade. Then again, you wait till the peak comes back up to, let's just say 70 or close enough to 70, and then you'll be able to jump back into a trade and take it down again.
Yeah, okay.
Does that make sense?
That makes sense. Yeah, it does.
Like those bottom peaks or whatever you want to call them, valleys, I wouldn't be taking, okay, it came down the bottom, now it's going up. No, because the trend is down. Therefore, I would not trade any of those bottom valleys to trade the price up, because the trend is not going in that direction. That's what I'm saying. A lot of people actually do think that, oh yeah, it's on a 70, I'll sell it. It gets to 30, I'll buy it. But see, if you bought in here, which I'll match it to the price, what happened with that? Basically, it just went sideways.
Still going down.
It went nowhere, as you can see. Therefore, this is called the false entry. You'd always want to basically try to trade off the trend. If it bounces off a trend line, there's a peak, then you can take it in the same direction as the trend. I always start off drawing a chart, and I'll show you guys here my Euro USD. This is how my daily chart looks like. I don't use any indicators. I use support. The yellow lines are support resistance lines, and the red ones are trend lines. Okay, so I use the daily as to see the position of where the market is going. I confirm it with the 1 hour chart, as you can see here. That's the 1 hour chart, and I only take positions like in here. If I was in this trade and it went sideways all of a sudden, I would wait for it to rebound. Like that bar took it to the extreme of the trend line or going downwards. As soon as this bar went in, you could have gone in here and basically just take it down to next level. Keep on moving your stop loss. I use those yellow lines here as in next targets. So from here, this is my first target. If it reaches to the next target, I move my stop loss. If it reaches the next target, I move my stop loss again, and so forth. I mean, I teach guys on coaching how I set up everything like that, and you can set up your own charts for any pairs that you trade. And basically, the good thing about this, it goes into the future, and you never have to change any of those lines. The only thing you got to keep on doing every so often is just draw the trend lines as the market obviously moves. So this is how you look at the obviously the RSI indicator. Well, find the trend first by drawing a trend line on your chart, and then look for the RSI when it's been at that point. Like you might say, there's one here. This is the sideways market, so you probably wouldn't have touched it at a daily, but it was established already here that the trend was here. Let me squeeze this in. Probably one more just to see the whole picture. Okay, that's where the market was trending up. In here, so now if I make this a little bit bigger, as you can see, wherever you could have taken, wherever it crossed the 30 line, which is, well, that's probably not really close enough, but you could have, because you know that the market, as soon as it goes past the 50 line, which is being somewhere around here, it's gaining strength, and you could have taken it, obviously, until it hit the peak, then you would have got out, and you'd wait for the RSI to come back down again towards that line. As soon as it takes off, you either wait till it gets to the 50 line and you jump in it again and hoping till it reaches the peak again and you jump out. Basically one way, and one way. All the time one way, going with the trend. Does that make sense?
Yeah, that's clear. That's good.
Okay, now a lot of people, like I said, to use the standalone, well, you can. I would say probably a good idea to use a stochastic with it to give you a bit more confirmation. That's probably the two indicators that you probably want to use, stochastic and the RSI. With the help of trend lines, you'll get a, close to maybe 80, maybe even more percent certainty that you will go in the direction you actually want. But if you were just mainly trading just by looking at the indicator itself from here to here, from here to here, unfortunately it's not going to always work. A lot of the times actually it will not work. You can sometimes use it as, use this indicator just like the stochastic and a few other oscillators where you can actually do diversions on this. As you can see, there's a lot of examples here where there's a diversion in here, and this is going up and this is going down, so it's creating a diversion. With another example here, again here we've got it down and up, which market's going to turn, so you can more or less tell which way the market's going to temporarily reverse on the diversion. But to really understand the RSI indicator, I would try it, as I previously said, use trend lines. As I say, trend is your friend. So use them, take advantage of drawing trend lines. And how you draw a trend line, you find at least one support point of a bit of a movement on a higher time frame. So if you got one support, that's already counted. The more supports the line hits, the stronger the trend line will be. Okay, and as it drops into, let's just say like here was this vicious drops, you can actually make another trend line more tighter. Obviously, this becomes a trend line which is more aggressive to know when the market's actually turning completely and changing direction, let's just say on a daily chart. Like in this, like I previously said here, until to be, let's just say 100% sure that the market actually has turned and is uptrending on a daily, it has to cross that line here. This is being aggressive. If you were to enter in a market, if there's a few more bars and it went past this bar, this is being pretty aggressive to do trades on the way up. Okay, so always work from at least a daily, double check with an hourly, and then trade off the 15. This is the 3 time frames that I always use. Scalping, obviously it's going to be a different story. Then you'll start off maybe from a 15, you draw your trend lines, and you can double check it with a 5 minute, and then look at it again on a 1 minute, which you can see here. 15 was down, 5 was look at it, 5 is still definitely down. So no, I wouldn't have entered this market going up, even though yes, you could have made a few pips here, but that's way too risky because it could have happened exactly what happened in here. Went down, went up, you're thinking, okay, it's rebounding, but no, it just turned and then it went up again. So anything in here wouldn't have been traded. This would have been basically, if I was trading it down, I would have maybe got stopped out somewhere around here, and I would have waited for an opportunity for this to turn, starts heading down, confirming it, and take it down. In other words, if this turns down here, goes back down below the 70, you can trade this as a scalp to 50, 30, and see what happens next, and wait for another zigzag. Does that make sense?
Yeah, I like longer term trading, I think.
Longer term, of course. I mean, this, unless you really know what you're doing, you got time to sit on the front of the computer and risk, taking 2, 3, 4, 5 pips. I mean, you know what? What's going to happen is this: you might win 2, 3 in a row, then you get one trade that'll just wipe off all your effort and sitting on the front of the computer for 4, 5, 6 hours, which is useless. Unless you got huge funds and you want to do that, feel free. With little accounts, I wouldn't advise that, because you'll be surprised how quickly you can actually get wiped out. So one thing to remember, trend is your friend, and always trade in the direction of the trend. And look, if there's nothing on Euro, you look up an Aussie USD. Nothing there, you look up, USD Yen, British Pound USD. There's just so many pairs to trade that you're bound to have something somewhere. And it's not about, how many you're going to win. It is about being in profit, even if it's a little bit. Some people go, oh, I want to get at least that much. Well, the way I look at it, any profit is profit, even if it's 1 pip. At least I know I didn't lose. So maybe it's a good idea to, as soon as you're in profit, you know what? Close down the trade, look for another opportunity. Because that trade, yes, it could have made you more pips, or no, it could have turned around and you just lost all the profit. I mean, look, I make mistakes too. I still do. You can't avoid it. I mean, me, I've always been looking into different trading systems and tried the EAs here and EAs there and this and that, and always finding something new and modifying something. And I don't stop learning, and that's probably my biggest downfall, because I keep on looking for new things. And really, to be honest with you guys, basics work. The more you look into it, the more new indicator you put in and more indicators you let up on your charts, you're going to be confused, because you're looking at one indicator saying one thing, looking at another indicator saying another thing, and by the time they both lined up, you already lost the trade, because it's gone, the trend has moved. I mean, unless you're going to chase. That's another thing. Don't chase the trade. If it's moved, wait for it to rebound. Like, let's just say if you jumped in here and you went in and now you're saying, oh, it's moved and it's going to move down. You know what? Let it go. It has moved. It has already moved, and you don't know whether it's going to keep on moving down. It might change. So wait till it rebounds, hits the trend line or something, and then jump in it. There's always plenty of opportunities. And one other thing I like to mention is, if you look at the charts, especially the Euro USD. See, I don't trade too many different currencies. I trade Euro USD, Aussie USD, gold, and maybe the USD Yen. And that's plenty of opportunities just right there. If you look at it, the characteristic on the charts, you'll see that certain time of the day the market moves in a trending direction. Like, example, here and here. Well, now here there's a bit release, but basically from around here to here. Again, from here, it's moving here. What happens then? London Open, American Open, London Open, American Open, London Open, American Open, London Open, American Open. And where do you see the most trend? London Open till the American Open. So instead of hanging around, let's just say, the Aussie or the Asian market, which goes virtually all the time flat, or it just zigzags you out like in here, or like in here, you think that it's going to start going up, and then it turns on you. Wait for the London Open, which is basically about now. It's already open. So
is it?
Yes.
Is it 8 o'clock local time, 8 o'clock London time, and 8 o'clock New York time? The opens.
Yes. I'm still confused.
Whatever that converts to.
Actually, to look at where are we? World clock. London.
If I know what time it is, so London, it's 8 o'clock in the morning in London.
8 o'clock in the
2
morning.
minutes past 8 o'clock in the morning now.
Yep.
Yeah. And then New York, it's 3 o'clock in the morning in New York. So I just go on my iPhone and look up world clock. That's all right. If I know it opens at 8 o'clock in the morning, I'll pay attention, special attention.
That's right. And look, give it a good half an hour for the UK market to actually establish its direction. Sometimes it sort of continues, like I think what's happening in here, where you get a bit of a whipsaw before it actually takes off. So I would give it a good half an hour to close to an hour, and that's when the market actually takes off. And you know that you've actually got till New York open to safely sit in one direction, where you might just have little movements sideways, otherwise it's just going to go one way. And that's the best.
That's about 5 hours.
Well, look, basically if you start from the London Open till New York lunchtime, you don't want to trade past the lunchtime, because that's when the volume slows down. So you actually got about 8 hours of trading, especially if you live in Australia. You know, plenty there. You can start trading after you come back from work. Jump in, put on a trade, let's just say if it's up or down, or whatever the direction the market's going, put in, 10 pips, 15 pips, and walk away, go to sleep. Or if you can stay up, or if you want to trade night trade, as I would say in Australia here, you can actually squeeze out the most you can out of the market. Have a trailing stop or lock in. You can, gather how much each day the market moves, whether it's, 50 pips, 100 pips. But I'd say on average, you could have at least 40 to 50 pip movement. So that there is definitely money to be made. Now, any questions, guys?
No, you've answered my questions. Thank you. I appreciate it.
You know what, like I always say, trend is your friend, and I trade by the KISS principle. If you know what KISS means, keep it simple, stupid.
Keep it simple, stupid.
That's it. Nice and easy. Trend and support lines, resistance lines, and if you want to use the indicator, by all means, just to give you a bit of, how could you say this, confirmation in a sense. And yeah, I mean, as you can see here, looking even at the 15-minute chart, 70% right on top. This one hasn't quite reached, but you could have probably even jumped in at 2 because it hit the trend line. Actually, that trend line got drawn after, so that wouldn't actually mean anything on here. So there's actually quite a lot that you can actually do. This one, perfect example, 70%. The trend was down anyway. Perfect entry. Take it to the bottom. Same maybe with this peak. Probably would have been a little bit too early, if I'm not wrong. Yeah, well, that one would have actually, if you were to get out at the bottom, now you still would have made money. Not much, but you would have. So let's just say go from here to here. You would have just been okay on that one. But here, perfect example, boom, down. So yes, they do work to some extent, but that's like written in the slides. It only catches the extremes, not every. Therefore, you always got to use the trend to help you define which direction you're going to trade in. If you want to add something to it. Oh, also another thing, standard, foreign. It's up to your own discretion what matches better. Have a look at your different charts on a daily, how does foreign looks like. You can change it to 8, or maybe you can even make it bigger, more smoother. To do so, you can just go to indicators, RSI, input, change it. I tend to stick to Fibonacci numbers, as in saying, let's just say 5, 8, 13, 21, 34, 55, 89, 144. So I wouldn't even use a 14 if I was to use the indicator. I would probably stick to 13 or maybe even 21. I mean, let's have a look. 89. What's it look like? Not much. Not on a 15 minutes. So it's probably not a good idea to look at such a high value. But you can definitely go to, let's just say, 8. You're probably going to have too many zigzags, or you can't get a clear picture. But on a, let's just say, maybe daily, might actually look not too bad. And as you can see, somewhat, yes, no, maybe. Play around with those figures. 14 is like saying, you know what, everyone uses 14. And does everyone make money? No. So play around with those figures, see what works better, and the main thing is trade with the trend. So you can capture it. You can capture those moves. You can, you will be honestly more than 80% right if you do and trade with the trend and only with the direction of the trend of a higher time frame. So like I said again, start with a daily, check with an hourly, and then look for the opportunity on the 15, and then just go for it. Because if, let's just say, you jump in at 15 because it says so that you should be jumping in, let's just say like in here. Now, let's just say the market goes sideways. Instead of dropping, it starts going sideways, and the RSI starts going sideways in here. It doesn't matter, because you know that the hourly and the daily is telling you that the market is going down. So you might be stuck for a few hours, but you know that sooner or later the market will move in your direction and you will be in profit and making a profit. Does that make sense?
Yeah, it does.
Yeah, it's always easier that way. That's why time frames it's you might say like it's magic, because you are following a trend direction and you do get stuck. It does not matter. If you were to do a trading on a daily, well then we're going to have to look at least a weekly and a monthly to see where the market is, whether it is trending in that direction. Otherwise you wouldn't want to sorry guys, my alarm went off. You wouldn't want to be trending against the trend, especially if you're doing a daily. I mean, throughout the whole day, you've got the market moving up and down, you'd be scared unless you've got a lot of funds, or unless you put on a little trade. Then it doesn't matter if you guys could be in the red. Again, overall, if you got the trend right, the market will move in your direction and you'll definitely make money. In here, monthly, it's still telling us monthly. What's the monthly market doing? Downtrend. So at this point with euro, it's definitely going down. Why it's going down? To be honest, guys, I really don't know, because the way to understand the market is the American dollar should be down, down, down. It shouldn't be as strong as the way it should be. It's actually totally against anything and everything as it should be. As you know, if you print your own money, you can do whatever you like. That's my 5 cents worth about the American dollar anyway. I would see that the Aussie dollar should be a lot more stronger, and the American dollar should be just actually dropping. But that's not the case. It's like a manufactured market, the way I see it. But you know what? Stick to the trend lines, support resistance lines, use RSI or stochastic, and you guys will be doing it right. I mean, I don't really follow the news, although I do trade the news now and then if I can be bothered. I'm a technical trader. That's why I say use the trend lines. I don't care what's going on in the market, because I'm always trading with the market, with the trend. I've got less problems of getting it wrong. Yeah, initially there might be news. Like in the last few days, there was news. It went up, and now the market comes back where it should be going anyway, because the higher time frame, it is still trending down. Therefore, Doesn't matter what temporary happened in the market the last few days that we had these news releases and the market went up. What happens later? It comes back down. So it's like saying if you were jumped in here and you were stuck on the sell trade, yeah, it's running away from you. Being 3 days later, on the 4th day, bingo, because you traded with the trend, so you would have been out. Does that make sense?
Luke?
Yes.
It's Graham here.
How are you, mate?
Can you hear me?
Yes, I can.
Hey, how you doing?
Good, good, thank you.
Luke, what's your thoughts as far as trading using the stochastic and the RSI? Is there any benefit between one and the other, or can you use both in conjunction?
I would use both of them, not one solely.
Right.
Let's do this now, actually. I just changed the color of that. 533. I've actually overlaid this. You can actually do it as actually just so we can see it. Actually, no, I'm going to leave it. You can overlay one indicator. Basically, instead of drag it onto the chart, drag it onto the indicator itself, and you can overlay it. The only thing I'll do different is change the RSI so we can see it clear as a different color. Blue. Okay. Okay. As you can see here, peaks on the stochastic, the green overtakes the red, following down, confirms that with the RSI that it's been on the 70 level, gives you confirmation. Bingo, stay down. Okay, so it confirms with it. Like in here, you probably wouldn't have bothered jumping in it to go down again on this level because the RSI is still down. Okay, so you wouldn't have jumped in here to trade it down, which is actually, you see, is actually helping you to determine, okay, the stochastic is here on its own and it's turning down. If someone was trading the stochastic by themselves, they think, okay, I'm going to jump in here and make a trade, but it didn't really go down. So it kept you out of the market. Okay, in here, again, we've got the RSI touching the 70 line. We know that the stochastic is going down as well. So yes, here selling it around here, yes, would be good. Market goes down. Not much, but it has. Keeps you out of trouble. Keeps you out of trouble. Again in here, the RSI went up. Confirm it with the stochastic. And bingo, you're taking this sucker all the way down. You wouldn't have jumped out here because it's not really reflecting all the way back. It has touched it. Came back down. Now you sort of start thinking, okay, it could be reversing. Even if you did come out here, still, that's a nice move in here.
Yes.
And you could have just waited for the opportunity till they both turn back up, both stochastic and the RSI, and as soon as they're both around that level, boom, take it down again.
Another short trade.
Another short trade, exactly.
Yes.
See, like now this is too much oversold position. This is turning, telling you that it's going down, but would you really jump in here? No, that's right. Because it's the RSI is telling it's in oversold. This is telling it's overbought in a sense, or well, halfway through. So it's like, no, you don't jump in the market. You wait till the price either comes back down, or if it doesn't even come back to that line, which it should, because that's the trend line here. It's like a resistant line in a sense. Wait for both of them to turn up here and to basically come down or make that bit sort of like the peak here, and that's when you jump back
Wait
in.
for the next retracement to happen. Wait for the next retracement to happen.
Exactly. Whether it's a retracement with the prices in here, or retracements with both of the indicators.
Right.
Okay, the price is there, and if the indicators are still down here, well then you know what? The short-term downtrend, the aggressive one here, because we're looking at 1 hour here, might break through a little bit higher. So wait for everything to line up. If this is up here, they both come down here and it's pointing down, well then it's the time to take it down again.
Fantastic. Thank you, Luke.
No problem, no problem. Any other questions, guys?
Oh, good, Luke.
Oh, good. Guys,
you very much.
just so you know, I'm not sure whether everyone's got your account funded, or maybe you've got some extra money you want to fund in. If you guys put in at least $1,000 into your account, I can give you guys a $500 credit towards your account as a special. Also, if you guys are interested in coaching, where I actually sit down with you one-on-one, you can either come to the office here, or we can do it via TeamViewer. If you guys just deposit into your account, this is free in charge. I'll actually show you how to set up your charts properly, where and how to draw the support resistance lines, how to draw the trend lines, and what to look for in the market. Will give you better understanding how I trade and how you can trade to make better decisions in entering and exiting the market, and where the market's going next, knowing more or less where we can set your take profit levels. This is for free for anyone who deposits at least an extra $1,000 in their own trading account. So feel free to email me. If you don't have my email, I'll just guys, just ring the office if you can, or just email info, ask for myself, and those emails or any questions or any phone calls can get directed to myself personally. Most of you guys, I would say, I have made some kind of a contact and or sent you an email, so that will be easy I'll be easy to find. And that's about all I can do at this point. And that's about all for today, guys.
No problem. Thanks very much.
No worries. All right, guys. Well, have a good evening or morning wherever you are, and this will be uploaded on YouTube tomorrow, so you can just look in FXTG Australia and watch it as many times you want.
All right, Luke, thank you very much.
All right, guys.
Thank you, Luke.
Thank you all for coming, and there won't be one next week. There will be one in the second week in January.
I'll go on, have one next week.
Oh yeah, no worries.
Yeah.
For Christmas, yeah.
That's it.
That's it. All right, guys. Well, have a good evening, morning, wherever you are, and I'll see you soon.
Thank you, mate.
Thank you.
Bye for now.
Bye.
Very good.